I've received lots of comments, messages, and emails from folks asking me to tell them briefly about what I currently hold in my rental portfolio. So today's the day. I'm going to share with you the properties I currently hold. Hi, I'm Jim Ray, and this is my rental property retirement channel. It's where I share with my audience how I'm building my rental portfolio in order to fund my retirement. Before I show you the list of rental properties that I currently hold in my portfolio, I want to share with you this one quick quote from Andrew Carnegie. Carnegie, a Scottish-American industrialist and philanthropist, has been quoted with saying that 90% of all millionaires become so through owning real estate. Now, I also believe in that statement, but I've also managed to diversify my portfolio to include not only real estate, but some equities as well. So I buy and trade stocks as well as stock options. But right now, we're here to talk about real estate. So you may want to know a little bit about my background in real estate. Well, in 2003, I bought my first rental property, and it was a buy and hold, meaning I bought it with the intention of holding onto it long term and just renting it out. Then, in 2005, I repeated that process. I bought another rental property, and again, I was going to hold on to it, rent it out, and keep it forever, right? So a buy and hold strategy. In 2007, I decided to expand my experience base and created a brand new house from scratch. So this is brand new construction. I created a new house. I was able to build a new single family home with the intention of putting renters in there as a long-term rental. So in a period of 4 years, I was able to take my rental portfolio from 0 to 3 homes. And then guess what happens after this? Well, in 2008, that's when we had that huge housing crash. And housing prices dropped dramatically. In fact, for me, my rental homes lost about half of their market value. So I'm only 5 years into being a landlord, and I got burned pretty bad. Now, the loss that I suffered was on paper, so I didn't actually lose money, right? So it wasn't a realized loss. But it scared me away quite a bit. So after that point, I decided to hold off and just hold on, see if I could hold on to these properties and continue to use them as rentals while I built up more of a cash nest egg. So I started to focus more on stocks and stock options and just held on to these properties and used them as passive income. And then in 2014, I decided to dip my toe in the real estate investing market again. So I decided to try something new. And I bought a fixer-upper outside of where I live. So this is an out-of-state property. You can kind of see it there in the photo. And this property needed a lot of work. But it was a fixer-upper, and I felt confident that I could get it done. Because I didn't feel like a rookie investor anymore. So I thought, you know what? You may have seen some of these shows on TV where people go in and they buy these distressed properties and they fix them up and then they flip them for a huge profit. I fell in love with that. That was the bright, shiny object in my life. And so I wanted to go ahead and chase that to see if I could do it as well. So in 2014, I bought this distressed property with the intention of fixing it up and flipping it. Now let's go ahead and take a look at this property. Which I ended up selling just because it became too much of a headache for me to manage and operate. But I'll tell you more about that later. So here's a picture of the property when I first bought it. And you can tell from the outside, you can see that, one of the windows is boarded up. You can see the roof is sagging in some places. It's in need of a facelift, right? It doesn't have much curb appeal. But I went in with the intention that I could probably do this. I wasn't too afraid of trying to do a fix and flip on this property. Now, if we look at the property today, you can see it looks a lot better, right? So you can see a lot of the basic structure has changed, right? So the roof line is different. The facade or the face of the building has changed. But the main structure still remains. But as it turns out, this property turned out to be more of a headache for me, kind of a nightmare. But the positive thing is I learned from the experience, but I did end up selling it and getting out of that. And maybe one of these days I'll tell you more about it. So if you'd like to know more about that particular experience, leave me a comment down below and maybe I'll make a video to explain the gory details of what happened and why I got out of there. I'm actually pretty happy that I got out of there because managing that property became too much work for me for what I wanted to do. It didn't really meet my business objectives. So there you have it. That's my current rental portfolio. I've got 3 single family homes that I use to implement a buy and hold strategy. And for each of those homes, I have long-term renters in place. And these tenants pay me on a monthly basis and will continue to pay me for as long as I hold these properties. Well, now as I'm getting older, I'm looking to increase my portfolio. And so now you get to join me on my journey as I search for more rental properties to add to my portfolio.